Yo! What's going on? How's everybody doing? Good evening. Who do we got in here today? All right. How is everybody? Lost your gains? Shit, you all right, Mikey? What happened? Hey, Timmy, what's up, baby? Mr. Willis, how are you? Todd Cohen, how you doing? Guys, let me know where you're coming in from, and let me know how you're doing. Love to hear from all you guys as always. Adam Bond, what's up? Fabio, how you doing? Mr. Goldberg, what's going on? How'd you do today? This is your type of market. Mr. LeMay in the house, what's up? Good. GE. Good evening. Okay. Chicago. Man, I was just in Chicago. Where you been? Sarah Bartel, what's up? Toronto. Okay. Oh, hot damn Aaron in the house. What's up, Aaron Smith? Man, we got a lot of Canadians up over here, huh? What's with Canadians and wanting to trade U.S. stock market? Do you guys not have your own stocks to trade? Just kidding, man. Just kidding. Love my Canadian brothers. I got two of the guys that work for me that I've worked with for years. One's from Edmonton, Josh, who's talking right now, and then the oil lord. He's from Toronto. Actually, he's not even from Toronto. I think he's from Brampton, where all the Indian people are. Good. Mr. Peters, what's going on? Well, good. Guys, welcome. We got a lot of stuff to do because, well, frankly, this is a great time to talk about stocks for a couple different reasons. Well, number one is right now you guys have probably been hearing the news and seeing what's been going on in the markets, right? The market has been having a lot of volatility. People's 401ks, right? Their IRAs, their trading accounts have just been getting smashed, right? If anybody here feeling the pain on that, right? In your 401k? Oh yeah. Oh yeah. I'm glad I work for myself now and I don't have a 401k, but if I had one, I'd be feeling the pain, right? So it's a good thing we're having this conversation because we're going to talk about a few strategies to trade an up and down market like we have now. And then, more importantly than that, it's also earnings season. And so earnings season is really my favorite time to trade because it brings out a whole host of different opportunities that you can capitalize on, both long and short, every single day. Kuala Lumpur, man. Now that's hot. Kuala Lumpur. Now that is hot. So let's get into this. Let's go in and figure out what we got to do to make a little money. All right. And guys, as you know, since this is a little bit, we usually don't do these on YouTube. We do these on GoToWebinar where all the questions are kind of assigned and cataloged. For this particular class, I'll answer everybody's questions at the end. So if you ask a question now, my boy Josh, he's got the Bulls on Wall Street handle. He'll make sure to answer it for you, and he'll make sure to help you out with that. But if it's like a trading related type of thing or has anything to do with these slides or what we're going to be talking about, then save it to the end and ask me, and I will make sure to go through every single question towards the end. I try not to answer them live because it just throws off the whole rhythm of class, right? And you guys have come here for information, and I mean to give it to you. And so sometimes if we dive too deep into something else, we get into all these tangents. And for those of you guys that have been with me a long time, man, I can really get on some tangents sometimes. And so we want to get this thing going. So let's talk a little bit about today's agenda and where we're going and what we're going to be learning. And then we'll start progressing into exactly how we got to get this thing going. So we're going to talk a little bit about what the heck's happening in the market, right? Is this really turning into a bear market? Or is this something that could be just bouncing back? We've seen over the last 10 years, right? The markets dip a little bit and then they just rip right back. Is this going to be one of those type of things, or is this going to be something that continues a little bit longer? and we'll show you a little bit on how to kind of profit from that and some trading strategies you could use to actually go out and try it tomorrow and the next day and the next day. From there, we're going to talk a little bit about earnings season. For those of you guys who know me a long time, I love earnings season. I would say over half the income I make from trading actually comes from those few weeks every quarter that involve earnings season. And the reason for that is that the most explosive moves, even though we trade technical analysis, come when stocks have earnings. They come when stocks have a PR. They come when they have some type of news out that changes the outlook of what's actually happening on the company. And then from there, what we do is we apply our technical analysis and the different trading patterns that you guys have probably read about and heard about, and then we marry those things to go out and actually make profits. We're going to talk a little bit about how to find the best tickers to trade during earnings season. The one thing to remember, the stock market, there are thousands of stocks. I think there's like over 6,000 stocks that trade in the US. So they all have to do an earnings report every quarter. So out of those 6,000 stocks that report earnings, how do you actually pick the handful every day that could explode or tank if they're bad earnings, right? How do we actually filter through those when you have so many and do it quickly, right? That's always the huge part is, sure, I mean, we could spend 15 hours trying to do it, but we don't have that, right? We have to do it in a handful of minutes every day in the morning, make our list, and then figure out how to trade them. And so we'll use a few simple techniques to filter them down, and then from there, we'll use just a couple more techniques and strategies to figure out exactly how to enter and exit them, and then you're good to go. I'm going to show you the two best trading strategies that I use during earnings season. They're primarily for the open. So in the trading day, there's 3 stages to the trading day. You have an open, a middle, and a close, and each one of those requires slightly different patterns. In the earnings season, I find that the open is really the best time to actually go out and trade this stuff. And then, we'll talk a little bit about our trading classes, and then we'll do a live Q&A. So give me a holler if you guys are, ready to roll and you're following along with me. For those of you guys that are brand new and don't know me, I'm the head janitor of this company, Bulls on Wall Street. I've been making YouTube videos since I can remember, right? At least 10 years, and I've had this business for a long time. I work with literally my best friends from grade school, the Three Stooges, and we work this business together along with the Oil Lord and Josh. And man, we've been really hustling the last few years, building this thing to put out great products for you guys. I've spoke literally around, the world talking about trading and the stock market. Not only am I a great trader, but one of the things that I really excel at, that I spend so much time on, is how to get people to perform at their best. Trading is just trading. It's a matter of learning a few patterns and then understanding what can happen next. But the discipline to actually go out and do what you're supposed to do is a whole different ballgame, right? For so many of you guys, right, we all do it, right? Anybody ever smoke a cigarette? Been guilty of that a couple times, right? Anybody ever do any cocaine? Right? We all do stuff that we know we're not supposed to do, and sometimes we do them. That's the discipline of life, right? When you have a right path and sometimes you veer off of it. We all know what a good leader looks like, but there are very few good leaders, right? We all know how to be healthy, yet so few of us are healthy. Well, in trading, it's the same way. You could go to any teacher or any class and learn a few simple trading patterns, but that doesn't necessarily mean that you're actually going to be able to do them unless you can condition your brain and, most importantly, your fingers to actually go out and perform when the lights are on. How do you actually go out when real money's on the line and be your best? And what I found for most people, 99.9% of the population, is that you can give them the best strategy in the world and put it on a platter for them. And you can tell them the entry, the exit, and exactly what a stock can do. And out of that 99.99, maybe 99% of them still won't be able to pull it off. Because in the end, when real money's on the line, we're not just trading stocks, and we're not just trading chart patterns, right? We're trading our hopes and our dreams. We're trading how we want to buy things or do things for our family or send our kids to school. There's so much stuff that we want to do, right? We have expectations of life, and those things come about in our actual trading. And so, that's a real big important part of, what we are always doing and what we're talking about. And so you'll see me go on tangents all the time talking a little bit about trading psychology because, frankly, I think it's so important. So many of us have the right backgrounds and the right education, and yet we still can't do what we're supposed to do. So that's always going to be something to think about. I trade a momentum-based strategy, which is what we're going to talk about today. I think for retail traders, who here is like a retail trader, like you're trading less than $500,000? Just give me a holler, just so I know if we got big boys or little boys in this one, right? Almost all of us fall into, right, retail traders, myself too, right? And as retail traders, we have limited amounts of capital. So we have to find ways to goose returns. We've got to be in the best stocks, and then we have to be at them at the right time, right? It's a market timing thing. And so we all got to do that. So holla, holla, right? So if you're a retail trader, you've got to be in the hottest moving stocks and exactly at the right time. And so you have to do market timing, and then you have to pair it with, of course, being into the hot stocks. And when you can marry those together, then you've got something where you can go from smaller amounts of money and then be bigger amounts. And by the way, I trade a $75,000 account. I made $3,500 today, trading $75,000. It doesn't matter. You don't have to have huge amounts of capital to trade and make good money. That's not how it works. Like, we've got to go out and just make good decisions, and the money takes care of itself. So when we think about like what we're going to be doing today, right? We're going to talk a little bit about how to find the best stocks. A big problem for traders is not knowing how to enter them at the right time. So that's something that we're going to spend a lot of time on today. Is how do you time your trades to the penny, right? Or to the multi-penny, right? And then knowing the right time to exit your position. I use a few simple rules and a dynamic list of reasons why I would get out of a stock. And that helps me really get in at the right times, but also leave at the right time. And then, of course, the big thing that, all of us really solve is, having a lifetime support team. One thing to really be, aware of when you're trading is if you have a trading buddy or a trading group that you're really close with, that changes really everything. So just something to really think about. So let's talk a little bit about the current market meltdown, and then we'll go into really how to actually trade earnings season. So we're going to kind of split this up into two. So for my charting platform, I use TC2000. What do you guys use for your charting platforms? Will you guys just type it in for me so I kind of know what you guys are working with? I've used all of them in the past, so let me know what you guys are using. What do you guys got? FinViz, Thinkorswim, what you guys got? Okay. Argentina, my man, what's up, baby? STT, okay. What's STT? TOS, okay, Steven. Jomu's got STT. What's this STT? E-Trade, okay, you got IB. Mr. Donahue, you got TC2000. All right, so a lot of you guys use Thinkorswim. Okay. RH. Okay, IB, TOS. Man, a lot of you guys use TOS, huh? Oh, Stocks and Trade. Yeah, Stocks and Trade should do the job. 100%. Trading View. Okay. TOS, web, active tip. Okay, cool. So I use TC2000. I use TC2000 for just a handful of reasons. Number one, because it's a pretty cheap price. I'm Indian. I don't like spending money. Hate spending money, right? You meet an Indian person, right? Any of you guys got Indian friends? Cheapest motherfuckers in the world, right? You gotta have an Indian friend. He's like a doctor, and he will nickel and dime you all the time. My sister, she's an emergency room doctor. I was hanging out with her in Chicago last week. And, as her big brother, I always pay the tabs and stuff, right? And that's just the big brother thing. And I always do that for all my friends and whatever. But, I had happened to have a security issue where all my credit cards, I had to cancel them. So, we're sitting there at dinner, and my sister, she makes like $700 an hour, right? So we're sitting there at dinner, and she's just like, so, man, you don't even got any credit cards and stuff, huh? I'm like, nah, I just got, a little cash on me and stuff. I figure I'm at your place, don't need much money. And she's like, yeah, so like, how do you pay for stuff? And I'm like, well, I just canceled them a couple days ago. I'm at your place. What do I care? And she's just like, no, how would you pay for dinners and stuff, hypothetically? And I'm like, oh, shit. She's telling me I got to pay for this dinner. And it was just wild. And I was like, I got some cash on me. She's like, I wouldn't want you to use your last cash, but if you have it, go ahead. I'm like, good Lord, right? She's the best, but man, that's how Indian people are. That's how Indian people are, man. That's just the way. I've been laughing about it. I've been hassling her about it a little bit. I'm like, man, you're so cheap. She's like, what'd I do? And I'm like, good Lord, And she's like your typical Indian person. Like you go and she's got she lives in a high rise in Chicago, and you walk in. And it looks like somebody had just moved in there, right? Like, there's no artwork. There's no pictures of anybody. There's like there's like a one couch and a TV, and then that's it. And I'm like, did you, people always ask her, did you just move in here? And she's like, no, I've been here for years. What are you talking about? Like, oh, you got a couch, a TV, and then she uses solo red cups to drink and stuff, and she washes them. So that's wild. So that's an Indian person. So to go back to it, I don't like wasting money. That's just how we grew up, right? We're just immigrant people, and so I use TC2000 because I find it's the best bang for the buck in terms of price, but also if you look at the color schemes and the way it kind of pops, it's very customizable, and you can do really what it is that you need to do. So just bear with me. Let's get into this. So if anybody does not have a charting platform, by the way, she's an emergency room doctor, Trevel. And she travels all around. People call her up when their emergency rooms are, understaffed, and they'll fly her to Kansas or whatever, and she'll go and work there for a couple weeks. So TC2000. Right? If you guys don't have a charting platform, just type it in, and my buddy Josh, my coworker Josh, who's Bulls on Wall Street, he'll send you a link. They have a free version of this, so you can get your stuff to look just like mine. There might be a little bit delayed data if you're day trading, but for the most part, I think it'll work just fine. So if you don't have any charting platform, just go out and download it. But let's take a look at the exact market and see what's happening, right? So I always follow, in general, the NASDAQ. The reason I use the NASDAQ, so if you guys got a charting platform, bring up the QQQs. So the QQQs is the ETF that represents the NASDAQ. So the ETF that represents the NASDAQ does a couple things. So this represents your tech sector, right? Novi, yeah, that's right. Michigan's the last bastion of hope where good people emerge. East Coast people, slightly crazy. West Coast people, a little crazy. The Midwest, we're the last good people left, aren't we? At least in Michigan. So now, why do we use the QQQs? Well, if you think about the U.S. in general, what are like the companies that we're always talking about? What are the companies that we're always watching? What are the companies that, are the leaders of, right, our society? Google, Facebook, right, Netflix, Apple, right? They're tech companies. And so when I want to gauge like what's happening with the actual market, I'm always thinking tech first. And I look at other indexes, but I look at the tech stocks first because tech represents growth in our company, in our country. It represents innovation. And now it represents really all the big companies, right? All our biggest companies are tech companies, right? And so I want to always look up and see where the QQQs are. That's your ETF that represents what the NASDAQ is. So it's done a couple things here, if you can see, right? So number one, like we've been in a monster trend for quite a long time. If you look at a weekly chart, right, really since the Trumpster got elected, we've just been on a massive run. You guys see that? So this has been 2016. We've just been on a massive run. So we haven't had really any pullbacks whatsoever, right? We haven't had any pullbacks whatsoever. But one thing to remember, like with the markets, is we have different things that we're always watching. So when you look at a chart, there's a handful of things that you always want to look at when you're looking at a chart. So when we think about chart reading, there's a handful of things that we like to do, right? Number one, whenever you look at a chart, the first thing that you're always looking for is trends, right? What is the short term, the intermediate, and the long-term trend? How does anybody know? How do you know like how to monitor like what's the short-term, intermediate, long-term trend? Anybody have an idea how you do that? Good. So one way is just via price, right? Actually looking at the price and seeing, right? Is it going up or down or sideways, so on and so forth. Another way to monitor the power of trends is to look at moving averages. So on my daily chart, for those of you guys that have charts, and for those of you that don't, just get the free version of TC 2000 and then make your chart look like mine. And there's a bunch of tutorials that I've written on it. So a couple things that I do on this stuff, right? Number one on my charts, I always add in a 9 EMA, a 20 SMA, a 50 SMA, and a 200. And then I use Bollinger Bands to kind of signal stretch. So your 9 EMA is your short-term moving average. So when the 9 EMA is pointing up, your short-term trend is higher. When it's down, in essence, your short-term trend is down. Now, it's a simplistic way of looking at it, but for the purpose of what we're doing, it'll suffice. Now, your 20 and your 50 are your intermediate term moving averages, right? And so those represent kind of like that mid, so beyond 9 days, so like your 2 weeks to 2 months. And then your 200 is your long-term moving average, which represents really the trend for the year, right? 200 business days, give or take, is probably about 1 year's worth of action. So 9 EMA, 20, 50, and 200. So the slope of a moving average can tell us what the trend is on a particular time frame. And so like what we can see right now is that our 9 EMA, which is our light blue line, right? It's coming down hot. Coming down hot on this thing, right? Now our 20 SMA also pointing down. 50 also pointing down, right? So our short and intermediate term trends are down. Easy enough, right? Now our long-term trend is still higher, but you're starting to see it flatline, right? You're starting to see it flatline. If this thing starts to point down, now that would be very bearish. So right now, though, you can see is like on a long-term basis, the trend is still higher. But on a short-term and intermediate-term basis, the trend is lower. So the market is obviously in flux, right? And that's something to be mindful of. When you have a trending market, there's almost very little volatility. But what happens is as you start to break below your moving averages, volatility goes up and things get a little bit more dicey. So a couple things I do to protect myself when markets get like this. For me, on my longer term positions, when the 50-day moving average starts to curl down, because a swing trade for me is like between 2 to 14 days, I don't hold any overnight positions to the long side. When the 50 SMA, write that down, when the 50 SMA starts to point down, I don't hold any positions overnight to the long side. All right? And the reason for that is one simple reason. When the market breaks under the 50 SMA and it's pointing down, you have a propensity for gaps in the market, right? Does anybody, you guys know what gaps are, right? Meaning that you could be holding a bunch of stocks and then the market will gap down like 1%, 0.5%, like it just gaps down. And so when you hold overnight risk, you could wake up and you're getting smoked out. I learned that lesson in 2008. Guys, I've been trading a long time. Don't let my young skin and youthful exuberance fool you, right? I've been trading for a very, very long time. And in 2008, I learned this lesson, oh man, so many times. I would see the market come down and I'd be like, wow, this stock is so cheap. And you would buy it. And then the next thing you know, the market gaps down a little bit and you're like, shit, I just woke up and I'm already down, 5% on it. So I learned my lesson after doing it a couple times, right? And that's something that you've got to always kind of keep in your mind. So I never hold any longs overnight until the market heals itself. As traders, we want to be, if you're trading to the long side, you want to be holding stocks in trending environments. There are times when the market's easy, and then there's times when the market has risk. Now, it's fun to catch the bottom of the market because you're like, shit, I got all these stocks for cheap and now they're going to rip. But it takes so many times that you have so much risk when you try to do it that it's not worth it. When the market is trending, you can hold it and stocks just go up for weeks and months and it's just all good to go. But when the market's acting like this and you try to bottom pick, it becomes really, really tricky. My mentor, Paul, he always used to say, bottom pickers, stinky fingers, right? Which means don't try to buy on the bottom. Now, on one end of that, we want to stay away from this. But on a day trading side, so we do short-term trading, what do we really think about the market? How low can it go, right? Well, if you look at the market, you've got a considerable amount of support that's kind of coming into some of these levels. And in the general, what you have to always think about is, if you look at the 100-year history of the stock market, right? In general, the market does go up, right? The market's just been in a big, long trend since the beginning of time, right? But it does have periods where, there's risk in it, right? And so we want to be in periods, where we're doing this, and those periods come, but we want to stay out of trouble when things are coming and looking nasty. So, my personal thing is, I won't sit there and just add a bunch of long positions and just pray for rain, right? That's a different type of Indian, right? We want to come in when we know that the market's healthy and when it's going to come back up. But now on the day trading side, it's awesome, right? As day traders, we like volatility, and so there's all sorts of stuff that you guys can do to kind of get into this stuff. So this is kind of what I do when I am seeing this type of market. Number one, we add short positions, right? Anybody here short? I like to short more than I long anyway. So when I was a new trader, I didn't even know that you could bet against stocks, right? I didn't even know you could bet against stocks, meaning you can actually make money on stocks when they go down. Like, who would have thought, right? Like, as growing up in Michigan, and my dad's just super blue collar guy, my thinking was you just buy cool car, you buy Ford stock and you sit on it for life and that's all there is. But, as I started to trade, I met my mentors, like, dude, in the market, market's going down, you just short shit. It's all the same stuff. I'm like, what? you can bet on this stuff to go down, right? That's amazing. And so that's where you want to always go with this stuff is, as the market is trending down, you can lay on the shorts and markets fall a lot faster than they go up. But one thing to remember is people always kind of people always want to bet on a crash, right? Like, oh man, the market's going to crash. This is going to happen. Markets crash like once a decade, right? Once a decade, markets crash. And so, right now the trend is down, and we've been kind of shorting quite a bit. But one thing that you'll notice is like, I've only noticed over the years, markets dip down for a couple weeks, maybe a month, and then it's just done because we're in a long-term bull market. And so we want to be careful not to press our shorts too much. My guess, educated guess, is that, we're probably going to get a big rally come in the next week or so. We have midterm elections coming, and so that, that can add a little bit of volatility to it. But, in general, markets do tend to bounce once they get this stretch. So just something to remember. We'll talk about this in a little bit, an instrument I use when the market gets like this. But first I want to touch on earnings season and why this stuff works. So earnings season. Companies report earnings every single quarter. This brings a catalyst into stocks based on, right, PRs and news. Okay? So technical analysis. What is technical analysis? When people talk about technical analysis, all they're doing is drawing a squiggly line on a chart, and then they're thinking like, okay, I'm a trader. Think about that, right? Like, could trading be so easy that you get a chart, you draw a line on it, and all of a sudden you're making money if it goes above it or below it? If trading was that fucking easy, right? Everybody would be doing it. There's nuances to trading that you always have to add in. Sure, things like trend lines and patterns are important, but there's also catalysts, things that move markets forward, right? And so earnings season, which comes around once a quarter, is my favorite time to trade because it takes the stuff that we do on a technical level, but it applies a catalyst to it, a fundamental reason on why we should be getting into the trade. Good earnings or bad earnings, good PR or bad PR. So we love earnings season because they provide gaps, right? Big gaps in stocks, which start to give it ranges. It makes it easier as day traders to extract profits from a stock, right? You get a bigger piece of the pie. Who here is, if you guys don't mind, just give me a heads up. Who here is like a day trader, and who here is like more of a part-time trader, meaning they need to hold stocks for like multiple days? Just give me a heads up. You give me a heads up on that, because I know I always cater towards day traders, but I personally like to do both. I think that to be a good day trader, you have to know how to swing trade, meaning like you have to be able to hold stocks for multiple days, and if you can't get those elongated gains, it becomes very hard to get short-term gains. Hey, Katie, so Josh is Josh, aka Bulls on Wall Street, handles one of my students. Josh, who's answering your questions right now, for those of you guys that don't know him, he's on the handle Bulls on Wall Street. He took my class when he was 16 years old. He became my intern when he was 18, and now he's 20. He works for us. He does trading for me, classes, marketing, whatever he can get his hands on. Okay, so we got day traders, scalpers, an options guy. All right. Day trader as fuck. Cool. Accidental swing trader. I've been an accidental swing trader. Take a day trade, turn it into an investment. Okay. So a lot of you guys are day traders. Cool. All right. And a couple of you guys are swings. Awesome. Personal belief is you got to end up, you got to kind of do both in life. You can't just do one or the other. What made me a good day trader was actually my mentor taught me how to swing trade. So Paul, you guys have seen his webinars and stuff. Paul taught me originally how to swing trade because that's what he does, which means I was holding stocks for usually kind of 3 to 14 days. All right. And what ended up happening was, Paul had taught me how to swing trade because that's what he had been doing. And then, as I quit my job and started trading full-time as a swing trader. And so I was trading part-time, at work, and I made enough money and saved enough money to quit my job. So then I'm like sitting at home one day, I'm like, fuck, I'm so bored. Because, as a swing trader, you hold like 2-3 stocks, and you might be in them for 5 days, 6 days. So like now I'm just sitting at home and I'm like what do I do all day? And I was like, man, I feel like I retired or something. I had nothing to do. And I'm in my 20s. It's Michigan, so it's snowing. My mom's sitting there going, do you want any food? Do you want any food? Do you want any food? So all day I'm just hearing, do you want any food? And I'm just sitting there, like I'm in my 20s, like, Ma, shut up! I'm on my computer, right? Doing nothing. Because I was swing trading, so I started sprinkling in day trades and stuff like that. And that's where I started going with this stuff. So let's get back to the earnings season. So, what I love about earnings season too is oftentimes good earnings are uncorrelated to the exact market. So what I love about earnings plays is that they have a volume flow that's independent to what's happening in the market. So like oftentimes a good earnings play, if the market's down, but a stock has hot earnings, the stock can actually keep going because it's got hot earnings. You saw that with Tesla, right, last week, right? Tesla had knockout earnings, but the market was tanking and it still went up. And so that's always going to be huge. So let's talk about how we find them and how we filter them. So you guys can use, you could use Yahoo Finance. I use a filter, but you guys could use Yahoo Finance. And one thing you could do is every single day, right, start flipping through different stocks that may or may not have earnings. I find this to be a little bit... I find that to be a little bit old school, right? I like to run scanners. If you want to, what I personally like to do, this is what I'll do every day. Hold on here. Hold on, little mama. All right. So I run a software. I use Trade Ideas. And I never run this thing during the day, but I love it during pre-market because it gives me a list of all the gappers and stuff like that. So what I do in the morning is I run a scan. Whoa. I run a scan like this, all right? And so now what's going on is in the morning, I'll start to see like stocks that are moving up. See these move? This one's 49%, 21%, 14%, 11%, 11%, so on and so forth. And then down too, right? So these things are down X, Y, Z. So I run a scan like this using a software called Trade Ideas that will give me movers pre-market. So I use them around 9 o'clock, right? So around 9 o'clock, I start actually filtering through what stocks are moving pre-market. Because I know that if a stock starts moving pre-market, that most likely it's got some type of earnings out or some type of PR out. And it doesn't matter. A press release or an earnings is the same thing, right? An earnings is technically a press release, and a press release is technically an earnings. But, there's different types of PRs that might come out. A company may sign a new contract. A company may announce some type of deal, right? A company could have some type of like FDA approval, right? For biotech stocks, that's a huge thing. We've got an approval, or you'll often see like with biotech stocks, they'll start gapping up and you'll read it and it'll come in as like, hey, we've got a deal with Eli Lilly or Amgen or something. Those are different things that could propel a stock to move pre-market. But what I want to do is filter through this list and see what's moving pre-market and then start looking at the charts, right? Then we start looking at the charts. And, man, you YouTube guys, focus, Katie. Focus, Trevi. We got things to talk about. Man, you guys are just trolling each other over there. Have a little fun. So, now what you want to do, right? Now what you want to do is start filtering through every single one of these to figure out like what you like, right? And the key to all gap plays, like as you're going through these, is to figure out which ones have like the cleanest daily charts. So do you guys know what I mean by cleanest daily charts? So as you're going through the gap list, right? As you're going through the gap list, what you need to do is figure out like which ones of these have the cleanest daily charts. You guys, what do you guys know about clean daily charts? What do I mean by that? Oh yeah. What do we know? What is it about daily charts? Like, why do we like clean daily charts? Good. So, like, when we look at, like, gaps, right? For example, if a gap runs into resistance, it's not necessarily going to do us any good, right? And so, like, what we need to have are stocks that are gapping up that are clean. So, like, when we see, like, say a gap like this. Like, this was a stock that had gapped up. So, this showed up on the gapper list. So follow me for a sec, Shez. So like, see how this stock was like at 22 bucks and it gapped up, right? Like $6, $7 this particular day. Good, Rowan, right? It gapped up $6, $7 that particular day. But on the daily chart, it just gapped up right into its 200 SMA. So it wasn't a clean gap, was it? So what typically happens, like when a stock is not breaking out and it's not a clean gap, it'll just come and fade back. So like those type of gaps, I have no interest in because most likely they're going to be going down. What we're looking for is something clean, crisp. Guys, clean and crisp charts are really the key to like everything that you do, right? So when you think about like trading and you're thinking about like, okay, what kind of gaps do I like? I want to see gaps that are stocks that are breaking out to new highs, even all-time highs. When we find those type of gaps, what we find is that those are going to be stocks that actually have follow-through, right? I mean, I'd take a 6-2 if it was like a Sunday. Right? So these are the type of gaps that we're looking for. Now, when you have a clean gap like that, then intraday you're more likely to actually follow through and you're more likely to actually continue on for a particular day trade. So we're looking for like just really, really clean gaps. And I think it's a big part of really all styles, all styles of trading, because if you can't get that, then you're really, really screwed. So like when you think about like you're going through this list, always think about like, is the stock breaking above or below a particular level of resistance, right? Is it breaking above or below? So like if you see a stock like this, so like, hold on here. So like if you see a stock like this, so this was Bazoon, right? So this stock actually had a gap up. So it shows on my gapper list in the morning and it looks wonderful, right? And you're looking at it thinking, okay, this stock is gapping up, so the earnings must be good. And theoretically, that's true. If a stock gaps up, typically, right, somebody likes their earnings. They're gapping it up. But like what happened with this Bazoon was it gapped up, but it ran right into resistance. It wasn't a clean breakout to highs. It wasn't a clean breakout to all-time highs. And so what ends up happening is the stock gaps up, but then it rolls right into resistance and starts to fade off, right? And so those are gaps that we don't like to play. If anything, if we do it, we actually short them. But that's a whole nother subject. So when we see these kind of gaps, so remember this. Like, see this bob up? This stock had news out. See how it was 178? And then it gaps up and it makes a run at the open. It gets about 186. But then what happens? Right? It starts to roll over. The reason it starts to roll over is, see on the daily chart, see how it gaps up and runs right into its 200 SMA. So that's no good, right? That's going to be a gap that fades. And so we usually call that an opening gap reversal. That actually ends up being more of a short than anything. And, frankly, that's a good strategy also. So always remember, unclean gaps are no good. Now, so we want to go through these. For those of you guys that do not have a charting platform, a scanning platform. So like I was telling you guys, I use Trade Ideas. if you do not have a charting platform, you can go on and use this stockmarketwatch.com. And with the stock market watch, it'll give you a little bit more limited place. But if you go on the stockmarketwatch.com, you hit the pre-market tab, what you'll see is like pre-market, if you run this around 9 a.m., you'll start to see stocks that start to gap up, right? Solo, Yecco, RHT, Craig, right? So you get all these different stocks that are moving around pre-market. So you could use this also as a filter to find stocks that are having earnings in the mornings, okay? So that's also one way to do it. Now, when you use the stock market watch, kind of cancel out all these ones. Like, see this one that has 599 shares, 1,000, 35, like you want to stick to the ones that have at least 10, 20,000 going. Otherwise, it could have just been like one buyer, right? And so that's going to be just a huge, hey, dad. Everybody wants to quit their job and start day trading. Look, day trading is a job. It's a career. It's no different than anything else. If you want to learn how to do it, you got to put together a long time. And when I say long time, it's not like a doctor, like 10 years, but it takes work, right? Like you're gonna have to study, then you have to practice, then you have to try it. You might have to learn some lessons, then you have to try it again. Right? There's a process to that. That up and down of any job you take or any career that you take, there's some lumps that go in. You can have, all the tools in the world, but I do think it's important. You always think about where you're gonna go and where you want to go, right? Keep that eye on the prize, but don't go in there thinking like it's gonna happen quick, right? And so always remember, it's just a grind. Like I work more hours now than I did before. Granted, I have a lot more fun and some days I don't work, but I'm always working in general, right? So always kind of think about this. So you've got trade ideas, you got the stock market watch. These are different ways that you can get into these things, all right? So now what I want to do, once I get in, is start to build a list of around 10 stocks on our watch list that are gapping. And guys, this is like a little bit more experienced type of stuff. If you're like just brand new and you don't know anything about trading, just post it in there and Josh will send you like an intro course so that you know at least how to set up your charts. And then what you can do is watch that intro course and then come back and rewatch this webinar. That way it'll start to connect the dots. So, if you have any issues or like you're kind of not following along because it's a little over your head, I would just go in and let Josh know and, go with that. So we want to build a list of 10 stocks on the watch list. Then I filtered them down to 3 or 5 come market open by filtering them through the following criteria. Pre-market volume. Where is the gap? Does the stock have a history of making big moves? So like a lot of times you can get a stock like it just doesn't have any range. But there are some stocks, like if you see them on the gapper list, when I run trade ideas, if you see them on the gapper list, like you immediately want to trade them right away. Like this IRBT. IRBT, like I've seen this stock on, and when it gaps down, I've seen this stock make like $10, $15. See this? This is about what, $15, $16 range right here. I've seen this stock go from 82 to 63 in a day, go from 71 to 55. I've seen this thing go from 100 to 85 and the next day to 80. So I've seen this stock routinely make $20 moves all the time. So like it's one thing to see like a gap, right? It's one thing to see a gap and put a stock on your watch list. It's another thing for that stock to actually do what you think it should be doing. Does that make sense? And so what I want to do is look and see if this stock in the past has done what I want it to do, right? So like if I see a gap down and I'm thinking I'm going to short it, I need to see if it actually can do what I should do, right? And that's going to be really, really important. So does this stock have a history of doing what I need to do? What's the float? Right? So anything under 100 million is considered low float. Anything under 500 million is considered medium. Anything over a billion is considered high float. Guys, float will help you tell the range on a particular stock. Does anybody know what float means? Who knows here what float means? Essentially, float means the number of outstanding shares that are available on the market, right? So it's talking about a level of supply that a stock might have when you're going into this. That becomes really important, I think, because the float will tell you how much range a stock can have. So like if a stock like General Electric or Bank of America, if you look at the float on both of those names, Bank of America probably has 10 billion shares, maybe 8 billion to 10 billion, 10.2 billion. So this stock moves like 50 cents a day, right? If you look at GE moves like 30, 40 cents a day, right? It just doesn't have any range. Why? Hey, Brian, how you doing? So when a stock doesn't have any range, then it doesn't have the ability to move the way you want to move because the float's too high, right? It's got so many shares out that it just takes an act of God to actually get this thing moving. So we typically leave those alone. The lower float stocks tend to move a little bit better. Now, when I say low float, a lot of times people think low float means penny stocks and small cap stocks. I very rarely dive into those because those are, we'll trade them at times, but they are turds for a reason, right? Oftentimes, a low float stock can still be a big company. Tesla is considered a low float stock. Netflix for years was considered a low float stock. Just because a stock is low float does not mean it's a small cap. Then I want to see if the stock trades thick or thin. And then, right, which way is the gap? Is this thing a long or a short? All right, so I built out my watch list. I've got these different criteria that I'm watching based on my scan. Remember, just because you have a scan doesn't mean anything, right? You have to take a scan and then filter it down using this criteria and then come up with a list of 3 to 5. Now remember, guys, I'm going to be trading live in front of you guys tomorrow, right? Who here's coming into the live one? So in the morning tomorrow, I'm going to actually run through this whole process in front of you guys and trade in front of you guys. And hope I don't get my ass smoked out, right? I make some bad trades. I'm just kidding. I'm going to do fantastic because that's just what I do. But I'm going to walk you through that process tomorrow and show you how we condense the big gap list and turn it into something smaller, right? So now I got my list. Now what do I do, right? So I got long list, short list, right? So first pattern, always, so when I look, I got a stock on my list, right? When I got a stock on my list that has gapped up, okay, let's just do a hypothetical. I've got a stock on my list that's gapped up. Okay, so you've got this stock, it's gapped up. You have it on your list, it fits your criteria. What do I do, right? What am I going to do? It's fantastic. I'm going to build a wall. Okay, me, Putin, okay, Kim Jong, the Rocket Man. We're going to build this wall, and then we're going to do this opening range breakout, okay? It's going to be fantastic. They're great people. I've got five-star generals working on this ORB for Bulls on Wall Street, okay? It's fantastic. They're great people. So we're going to go and we're going to do this ORB, right? So I've got two options. So let's think about this just in generic terms. You get a stock on your list, you're going to have two options. One is an ORB, the second one is a quick pullback buy. So an ORB is a highly effective day trading setup that gets you into momentum stocks early in the move. So we're looking for a stock that gaps up. So you can use your stockmarketwatch.com or your trade ideas, right? Then we're going to wait for a minimum 3 candles sideways consolidation period to buy on the break of it. So essentially what you're going to be doing, right? You're going to get a stock that gaps up, goes sideways for minimum 3 candles, and then you're going to buy the break of it, right? Now, the key to this type of trading, guys, is you've got to have like really, really clean charts, okay? So like this grub, all right? So grub, it gaps up the highs. You see its earnings over here, how it's breaking out the highs? So check. So for those of you guys that are new traders, I want you to think about trading as like a recipe. In a recipe, what do you have to have? You have to have a set, very specific list of ingredients before you can, right, bake your cake. So if you're going to bake a cake and you're looking at a cookbook, what do you have, right? You have this cake and it's like, okay, I need 2 pinches of this, 3 pinches of this, 4 loaves of this much butter, this much eggs, blah, 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 right? So you got a very, very specific thing. Now, what happens in the recipe if you replace the brown sugar and you put in black pepper? All of a sudden, your cake don't taste like cake. So in trading, it's the same exact way. When you have a recipe for a trade, everything has to be just right for you to actually go out and make a trade. So your trading recipe, when you're looking for a gapper trade, number one, you look at the daily chart. Is it breaking out? Check, right? Number two, does the stock have a history of making big moves? Check. Number three, what's the float? So on your TC2000, your float will always be in the left corner. If you don't have it or can't figure it out, let us know. We'll show you how to do it. Right? Check. Now, intraday, what I need to see is a pattern that matches my daily chart. All right? So this is your recipe. It's a jacked up cake. You don't want to put black pepper in your cake. Even if you're from India, you don't want to do that, right? Even Indian people like a little sugar. We're not just spice Nazis over here, right? We want a nice cake, right? We got a nice cake. So what I need to see is, I need to see minimum 3 candles. So see how this stock gaps up? Whoa. See how this thing gaps up? You get 1 candle, 2 candles. See how the third candle you break out? You break your highs? When you get that, now, man, you know what? This presentation mode sucks deep. Hold on. Oh, shit. Let me get this thing bigger. Hold on. You know what? Hold on here. I'm not a big fan of slides. All right, what are we? What are we, professors? We gotta use slides. Hold on here. Let me whip out some trades here. Okay. Fabio! All right, cool. Let's do this. All right? This is what I need to see. Yeah, Brian's the man. We call him Big Daddy for a reason. So, what do you notice here, guys? All right, so this is exactly what you want to see. See how this stock gaps up? So you got the gap, right? Now you get a spike at the open. Now you need minimum 3 candles. It doesn't mean that you have to have exactly 3 candles in the break. No. You need minimum 3 candles, and then when you break the top end of the range, you're going to hit this thing, right? So you pop up here at 4, right? Then you come back 1 candle, 2 candle, 3 candles, right? And then you bust loose. So you're going to hit this thing as it breaks. Now, look, notice how this one, and trading is never so linear where everything is so clean, right? Notice how this stock, it broke loose here. So I actually hit this thing here. But like your stop loss goes under your nearest support, right? So like you have like the bottom of your range right here. So this thing busts loose for a second, and it comes back in. But it doesn't hit your stop. Sometimes that'll happen in stocks, like where you'll pop up a little bit and you'll come back. In trading, there's no such thing as, right, green light buy, red light sell, where everything just works so perfectly. So, but we have to always be mindful of that, not to overreact to a couple pennies here or there. So like this stock pops through, but it doesn't actually follow through, right? It comes back, but it doesn't hit my stop loss. And now this thing busts back through and breaks out over this 4, right? So you got, right, multiple attempts. You got minimum 3 candle sideways movement. And now you've got this thing as a run, right? Now, this is the thing with day trading. So, guys, opening range breakout. Why do we call opening range breakout means? Shit, Steven, what can I do, right? It's YouTube, baby. Opening range breakout means, yes, and I use 5-minute candles. Opening range breakout means it's for the open, right? So if it's for the open, how long are you going to be holding on to this thing? Well, you're not gonna be holding on to it. Man, YouTube doesn't have any drawing tools? That'd be hot. Let me see if this OBS does. Yeah. Cool. Well, you're gonna hit this thing over 4. That's just the nature of the game. And we don't got any drawing tools right now. Now, how do you know when to sell it? I typically, you don't want to hold these things long term. If it's a small cap stock that was 50 cents, it's going back to 50 cents, right? And so that's going to be really, really important. These are short-term trades. So as it's spiking up, once you get 2-to-1, 3-to-1 reward to risk, you want to start scaling out. I typically will scale out into 1/3, okay? 1/3. I scale out at 1/3, meaning if I have 2,000 shares, I'll sell 1,000 into the first spike, 500 in the next spike, 500 into the next spike. That's where we've got to go with this. And you don't want to marry these things. Small cap stocks, it'll go back from 6 to 4 in a hot second. Do not marry these things. These things are $1 for a reason. You know why they're $1 sometimes? Because they're turds. And then, yes, use your 9 EMA. Okay, check out this Octa. So you guys really can't see my mouse, huh? Me just hovering over all this shit? All right, so this Octa is breaking out. See how it breaks out the highs on this earnings, all right? So now, I typically do, the larger dollar ones too. So now you've got a breakout on the left side, right? It's breaking out 2 highs. So now look on the right side. So I always keep a daily chart on the left side, all right? I always keep a daily chart on my left side. That represents the big picture. On the right side, what I do is my intraday. And I use always 5-minute chart. So notice how the stock spikes up to 70. And then it goes sideways right at 70. See how you get to 70, then you get a red candle the next one, right? And then you get a third candle, it's a little bit under 70. And then when it finally takes out the range at 70, that's where you're going to buy, and you usually put a stop at the bottom of the range. So in the case of this stock, right, the bottom of the range is the brown line, right? The brown line. That's your VWAP, right? And we want to go in with that VWAP and let this thing really, really roll. So just kind of simple way. So we're going to hit this thing at 70, put a stop under the VWAP. Now we want to shred this thing to the upside. So if I bought it at 70, 72, 73, you want to sell off half, right? And then you want to keep trailing the rest up. I'll use my 9 EMA and kind of trail the rest up. And then when it breaks under the 9 EMA, you could get out the rest. Your 9 EMA is your light blue line. ¿Comprendes? Okay. Check this out, V-Ray. All right, so V-Ray, what do you see on the daily? 1 test, 2 tests. So look on the left side. 1 test, 2 tests, 3 tests, right? On the daily chart, it's breaking out the highs. So now what we need to see intraday is minimum 3 candle consolidation. So look on the right side. It gaps up. You go sideways. 1 candle, 2 candle, 3 candles. On the 3rd candle, you break the trend line, right? So you're going to buy. Set your stop under the bottom of the range. Use that brown line. That's your VWAP. And now you're in this bad boy. So guys, type in for me, where would you buy this? Come on, tell me, where would you buy this? Come on, baby. Where would you buy this? What's your buy spot? Good, James. Thank you, Zoo. Appreciate it. Where would you buy it, guys? Come on, type it in. Good. We're going to buy this thing at $11.25. All right? We're going to buy this thing at $11.25. Our stop loss is going to go, baby, $11.10. You could do $11.35 too. You're right. You could do $11.35 too. Good. $11.50 is too high, right? Look where the trend line is. Right? If you can get it a little bit lower, get it a little bit lower, right? Put your stop under support. Now, look, once you get 2 to 1, 3 to 1, you want to sell off into the first spike. Remember that this is called opening range breakout. It's not called I'm Warren Buffett investing into this thing for the rest of my life trade. It's called opening range breakout. All right, it's called opening range breakout. So we want to hold it quick. So we sell off into that first spike. Then we use our 9 EMA, that light blue line. We trail that bad boy up like men and women of honor that we are. Make sense? Comprendes? Good. That's what I like to hear, right? Whoa. Now, you can do the same type of trade on the short side, guys, because you don't have to just long stocks, right? That's a sucker's game. We're going to make money long. We're going to make money short, right? So this is Whirlpool. You can see now this is clean too. See how it's breaking down all these levels? So what do you see at the open on the right side? So the left side is always your daily chart. The right side is your 5-minute chart. No matter what charting program you use, how new you are in trading, remember that for the rest of your life. But the left side, your daily, right side, your 5-minute. You align on multiple time frames. The people that suck at day trading or trading in general, they look at one time frame, they draw some lines, and they think they've got it. A pro sees the angles on multiple time frames. You got a daily, you got an intraday, and then you shred, right? So on the daily, the stock is gapping down. On the intraday, what do you got here? Gap down, 1 candle, 2 candle, 3 candle, 4 candles. Boom. Short, set your stop above the VWAP, let her rock. Short, set your stop, let her rock. Always remember that in the back of your head. Guys, for the rest of your life, remember that. Short, set your stop, let her rock. If you don't use a stop, you have unlimited risk on any trade. If you ever have let a trade go in your life, just get past you, and you had some hopium, anybody do a little hopium trade where you hope it comes back? Then you got to use stops, right? If you're in the business of hopium, you should just use a real stop loss and let it be, all right? And so that's where it's got to be. Oh, truly, you might be waiting for days, baby. Josh's a busy guy. No, I'm just kidding. Very, very important, right? What was that stock we just took? Josh, what was that stock we just took the other day that you shredded on? CLVS, right? So check this out. If I could turn back time, if I could find a way. So this is a stock we took a couple days ago. This was actually Josh's idea, a.k.a. Bulls on Wall Street handle. So this CLVS had this gap. You guys see that? It had this gap on some earnings, right? So now look what happens. So this stock's at 26. It gaps down. You see that. So it's on the gapper list, right? Always just stop. I think in general, it just helps. Look, people don't like using stops because they hear from the grapevine, oh, the market makers are going to take it. Like, these are just old urban legends, right? There's no market makers. Where I got a bunch of buddies that were millionaires from being market makers back in the day. They don't make any money anymore. There aren't any market makers, right? So it's just all old wives' tale, urban legend, to spook you into not using a stop loss. It's like when people say, like, they read the level 2 and they're like, they see all this stuff in level 2 and come on, give me a fucking break. Will you fucking look at the level 2 and you're going to figure out whether to buy or sell something? Get the fuck out of here. Those people are scamming you, right? So, $26. This thing comes back down, 24. Right? Now you get one candle sideways, two candles sideways. Yes, the wicks are there. The third candle, well, this will be the fourth candle. It breaks these lows, right? So pop down, go sideways, short. So you want to short this thing here. Set your stop order, that WAP. Now you let it rock. Guys, this is the good part about earnings plays. When can a stock just drop like $3, $4 in a hot second, right? When can that happen? Very rare, right? Unless the stock is a fundamental catalyst, all right? Now, I know a lot of you guys are, those you like the pennies, your penny poppers, right? Penny poppers, right? Penny slayers, whatever you guys want to call yourselves, the small cap guys. And we'll trade some small caps too if it shows itself that we need to. But if you think about this, say you got a smaller account, right? And this is where the misnomer is for most people. People think they need a small account to make, they need small caps to make money. Say you have a small account, right? And you're in this thing and you're shorting at 24, right? Well, if you're shorting at 24 and you got a small account, say you do 200 shares, right? Say you got 200 shares, so that's 5,000 in capital, right? If you're using margin or whatever. Well, if this thing drops down to $20, $21, right, that's $3 potential dollars. So you have a potential for $600 of gain by just having 200 shares. That's a pretty solid day. And it's a lower risk, easier trade than a lot of small caps, which are flying around and they're pump and dumps, right? Most small caps, they go from 2 to 6 and then they die down. And you know who's the sucker that's buying at 6? Right? Regular people, right? And so I find it easier to take something like this that's a $20 stock and whip around 100, 200 shares, and you can make money. Remember this, guy, there's no get rich quick in trading, right? If you think you're going to have $500 or $2,000 and you're going to make $2,000 in a day, it's not going to happen. How you build a career in this is by making $100 or $200 a day and building it up, right? Because what will you have after a month? You have a decent little wage, right? What will happen after a couple months? What happens after 3 months? But what happens is a lot of times people just want all that money right away and they don't go through, right, low risk, high reward trades. Something like this is a really low risk, high reward trade because, look, if you can make a few $100 on it, man, with very little risk, that's a lot better than, right, trying to pile in to some penny stock. Pile into some penny stock just because it's cheap, right? And it's just going to get pumped and dumped anyways, right? I mean, you might as well trade something that's liquid, that's something you can get in and out of easily. So I think that's just kind of important. Frankly, it's not for everybody, but I think it's really important. You should be able to trade all types of stocks, not just penny stocks, but real stocks too, because they can make money. If a real stock is moving $5, say a stock is $40, and it's got a $5 range. It goes from 40 to 42 to 43 to 45, and then back down to 42. It's all in the day. And you're just trading 100 shares of it. Isn't it easier for you to make money when something's got a $7 range and you're trading it back and forth versus some $2 stock that goes from $2 to $2.20 and then back down to $2? Where's the range in it for you? How can you get in and out of that? Right? Penny stocks usually just spike up in 1 or 2 candles and then they die. Right? Where regular stocks, right, they're going to move back and forth. They have an ebb and flow to it. They move with the market, right? And they have their own kind of waves that go in, right? And that's going to be really, really important. So let's talk about setup number 2. So if a stock gaps up and it doesn't do an ORB, what do? We look for a quick pullback buy. Trading is all about mapping out a trade. Mapping out a trade. You get a gap. Set up one, you go ORB. If it doesn't ORB and it pulls back, then we go quick pullback buy. A quick pullback buy is when a momentum stock has a strong run in the morning and then it starts to pull back to support as traders take profit. It's essentially just a pullback trade. So what we're looking for is a strong thrust in the morning and then a quick pullback to either the 9 or the 20 EMA. So on your 5-minute charts, guys, put a 9 and 20 EMA. Very important. All right? So if you don't know how to do that, just let Josh know. He'll show you how. Right? We want to buy the pullback to 9 or 20 EMA. Now, we don't know where it's going to pull back. We don't know where it's going to hold. I wish I did, right? What we're going to do is watch the pullback and then see where it holds. I want to see it pull back, and then I want to see a green candle to hold. When it holds, that's where I'm going to hit it and put a stop under that last low. So what I'm looking for is right at a gap. So like, see, you get a gap like this. So this stock's got some news out. Maybe it doesn't have news out. You're right. Somebody just asked, can you do this on any gap or does that have to be earnings gap? Yeah, you can do it on any gap. So you got a gap like this, right? So stock thrust up. Now notice like it doesn't ORB at the open. You don't get 3 sideways candles right at the open. Do you notice that? Like you don't get the 3 sideways candles at the open. So then what starts to happen is it starts to pull back towards its 9 EMA. And then you get a green candle to hold once it holds its 9 EMA. That's where you want to buy this thing. Put your stop under the last low. And now you're into this thing for the big shredder, guys. Right? And that's where you want to go with this. So if it gaps up and it does not go sideways, that's okay. If it gaps up and it does not go sideways, that's okay. Let it pull back to the 9. You get a green candle to hold. That's your confirmation. Now, the longer you hold at the 9 EMA, see it starts to round. The longer you hold at your 9 EMA, obviously, the more confirmation it gives you. But, like, yeah, in general, 1 green candle is enough, right? 1 green candle can be enough. And, yeah, Tesla is, like, notorious for, having kind of big days like that. It's had a nice run so far. For sure. It seems like a lot of people asking me about Tesla. People love the Tesla. Now, see this AWSF. So see how this thing gaps up a little bit? Now it has a nice spike at the open. Now notice, like if it doesn't go sideways at the open, that's okay, right? If it doesn't go sideways at the open, give you an ORB, that's frankly okay. Frankly, ORBs move so fast and sometimes they're a little bit harder to judge. A quick pullback buy, I think, is like a lower risk, easier play for you guys to catch, right? Lower risk, easier play for you guys to catch. So watch it pull back to the 9. That's your light blue line, right? As it holds at the light blue line, and then you get a green candle to hold, right at 10 o'clock, you're buying this thing. Right at 10 o'clock, you're buying this thing. You're setting your stop under that last low. And now you're into this thing, into the big rip. Guys, the 9 EMA pullback is just like a quintessential pullback pattern that you guys got to get used to. You got to get used to because it's a low-risk trade that, frankly, allows you to watch the trade for a little bit before you get into it. Sometimes with the ORBs and trading right at the open, things move so fast that you're just like, right? You're thinking like, whoa, where'd this thing go? A 9 EMA pullback works really well. Like I've seen like with my students, like, I grade my students' trades all the time. And like I notice like with my students, like some of them, they'll come in and like they like routinely, that's like the setup. Like I know like all my students, when they share their trades with me and we're grading them, one thing I notice, like Henrik especially, one thing I notice with him that he does is like he trades a really small account, but he's really consistent at making like a couple $100s a day. Like just super consistent with it. But one thing that he does, like I've noticed, is like he never He doesn't make money in the ORBs because they just act too fast. But what happens with him is that when he does a quick pullback buy, he has time to watch the trade, right? So he has time to watch the trade set up, and then he's able to buy and set a stop. And I noticed going through his trades, he's been really on a good run, making a couple $100 a day, every day for really the last month or whatever. He's doing them on quick pullback buys because it's just an easier trade to manage. And I'm noticing that when I grade my students' trades, you've got to do that. And by the way, for those of you guys that are already trading, have somebody grade your trades. It could be whether it's a teacher or not. It's nicer if it's a teacher, but even a friend or something, share your snapshots of your P&L, your charts. Have somebody grade your trades. The accountability, but the second eye just really, really helps. So let's talk about quick pullback buy to the short side. So this stock Sono, see how it gaps down? So it's on the gap down list, right? There's girl talk out there. There's girl talk on there. So see how this thing gaps down? That's the girl talk channel this is my mentorship group. The girl talk channel is where we have that's where we could talk like bros, because we have a lot of girls in the mentorship group, Cheryl and the twins and stuff, and so we need a girl talk channel to talk about man things. These days you're not allowed to really say much, you got to be real careful. I don't need my mom or my sisters call me a sexist pig. So we have a girl talk channel, keep things real smooth. So this thing gaps up, all right? Notice how it doesn't ORB at the lows on Sono. So then this thing starts to pop up to the 9 EMA. Notice how when Sono pops to the 9 EMA, when you get a red candle to hold. Remember on the upside you want green candle to hold, on the downside you want red candle to hold. All right? So when you get the red candle to hold, hot damn, you're going to short it during that red candle. Short it during that red candle. Stop goes above the high. Now you're ready to go. You get short, set your stop, let her rock. Where would, guys, give me a rundown. Do you short at the 9 EMA there? I do. I got so many TVs and shit back here. I got 65-inch TV, 55-inch TV. I got TV over there. I got all. The only thing that's missing is chicks. I got video games. I got TVs. No chicks. That's a trader lifestyle for you. Now, where would your target be on something like this? Guys, give me a rundown. Where would your target be on something like this? Come on. I'm sorry I'm a little jumpy today. I've been standing up all day, man. It's 6 in the morning, man. I'm getting a little bit more hyper as I go, Got to bring the heat every single day. Where would your target be, guys? Come on. Spit it out. Where's your target on a trade like this? You take it at the 9 EMA. Where's your final target? Come on. Spit it out. There's no good or bad answers. Yeah. Good. VWAP would be probably the first target. Eric Mendez, props to you. Man, Foos got no chicks. Not anymore. Good. First target VWAP, last target low of day. Awesome job. And then use your 9 EMA to kind of trail these things down. Excellent. My friends, my peoples, good. Eric Mendez, ¿cómo está usted? That's right. You did good. Guys, you can do this type of trade. Upside, long side, short side, all day. Oh, yeah, hold on. Hold on, little mama. Check this out. Now, you don't have to even, quick pullback buy like this, you don't even have to do it, on a stock that had bad earnings. So the market's super volatile right now, right? So check this out. So like on Friday, see how SQ gapped down? So it was 73, gap down to 70, got down to 69, right? Notice how so you have two options. When it gets down here, if it goes sideways like this, right down here, good, then you just ORB the thing, right? But it didn't ORB, so it starts to pop. So what happens, you let this thing pop into the 9 EMA, right? 9 EMA, you get a red candle to hold. You get a red candle to hold, good. You're going to short, set your stop above this high. Short, set your stop, let her rock. Always. Short, set your stop, let her rock. And guys, use that stop loss. I know you don't want to. You feel dirty doing it because somebody told you shouldn't do it. Use that stop loss. You can always come back from a small loss in trading. It's hard to come back from the big loss. The big loss wears on your psyche. The big loss takes months and sometimes years to get past. But a small loss, you can shake that off, right? And so my thinking is man, you get a setup and you trade it, one of the patterns I'm showing you, just put the stop loss. Put that stop loss, right? It's going to save you so much heartache. You know what happens when you don't use a stop loss? You know what you end up doing all day? You just Netflix it. You start eating pizza. You go to your neighbor, right? Your unemployed neighbor, because you're at the computer. All your friends are working, so you got to go to your unemployed neighbor, knock on his door. He's gonna be a huge asshole. So you go, hey Bob, what's going on, right? This real weird stench comes out. And he's like, I ain't doing shit, man. Come on in. You're like, no, I don't want to come on in, man. Come on, man. Come on down and sit down. Let's hang out. And you're like, shit, man, I got nobody else to hang out with. I just took this big loss. I got to knock on Bob's door. You knock on Bob's door. He invites you in. You're like, why is he inviting you in? He's like, come on in. And all you want to do is bum a cigarette. And, right, Bob's the only one that you know that's around. And so you want to bum a cigarette and do this. And then next thing you know, Bob invites you in and you're stuck with him. And, everything changes. So why do 95% of traders, and I think this, you know what, Josh, who makes these slides, he's like a nice guy and all. Let's be honest. Why do 99% of traders blow up their accounts? It ain't because they're stupid. Man, I meet a lot of smart people in this world, man. Americans are smart. Canadians are smart. Europeans are smart. South Americans are smart. Right? We're smart people. We're smart people. So, why didn't so many smart people blow up their trading accounts? Seriously. There's a whole world of smart, hardworking people. Why are they blowing up their accounts? Number one, poor risk management, right? They don't use the stops. Next, they get in a trade. They don't use a stop. Next thing you know, they're at Bob's house. All they wanted to do was bum a cigarette. Bob says, come on in. Come on and hang out. And you're thinking, man, why does Bob have a ponytail in the middle of Michigan? It just seems weird. And Bob's like, come on in. Oh, you want a cigarette? Hey, before we do that cigarette, you want to try a little crystal meth? And you're like, fuck, Bob. And now Bob's pressure, you do a little crystal meth. And next thing you know, you're doing the crystal meth and you're smoking these cigs. And all because you didn't use your stop loss. So, fucking A, right? Fucking A. Don't do it, right? So, poor risk management. Use your stops. I'll tell you a little story, all right? So, my coach, Paul Singh, right, who works at Bulls on Wall Street. Paul Singh, when I hired him to help me with my trading, this was in 2006 maybe, Paul looks at all my trades. So Paul asked me a series of questions. He says, well, how you been doing? I'm like, I'm not making money. I'm not consistent. I'm not consistent at all, and it's driving me crazy. I got to get consistent. He says, all right, let me look at your trades. Let's see what's going to do, right? So Paul looks at my trades, and I'm all dejected. He goes, well, this is the thing, Kunal. I'm like, what? What? I thought he was going to give me this special pattern or something, right? I got this super duper special pattern. He says, well, if you took out your 6 worst trades of the year, you would actually be green. I'm like, just 6? He goes, dude, you take 1,000 trades. If you took out the 6 worst, you would be green on the year. You'd be a profitable trader. You'd be doing this for a living. I'm like, what? How's that even possible? I feel dejected, like I've lost so much money. He's like, no, you haven't lost so much money. You've lost so much money in these 6 trades. So he had me do an exercise. He said, okay, what if you put a stop loss on those 6 trades and you let, rather than these like heroically bad losses, what if you just lost $500 on each one because you used a stop loss? I'm like, well, shit, I've been losing $5,000 on each one, right? So he goes, imagine if you just lost $500 on it. I'm like, oh my God, I would be profitable for the year, right? Out of the 1,000 trades, those 6 trades ruined my year. I'm thinking I'm the worst trader in the world. I'm just hanging out. I'm not hanging out with Bob, by the way. That's just a story. But I'm just saying in general, right? That's the type of stuff that happens. So use a stop loss. Poor risk management. That's one of the reasons people blow up their accounts. Not just poor risk management, but poor personal management. Risk management goes 2 ways. One is using a stop loss. The other part is understanding your personal patterns. What are the things that get you in trouble personally? Anybody ever seen bootcamp students? Who's here? Any of you guys ever seen a webinar from Dennis Choan, one of my students? Dennis Choan is one of my students who's gone through the ringer, but great trader, right? Dennis Choan has a rule. He doesn't drink during the week. No alcohol during the week. I said, what the fuck, Dennis? Who doesn't drink during the week? He goes, people that lose money. Right? People that lose money. And so he said, hey, anytime I had a beer and I had a wine, I feel a little groggy in the morning. I lose money. Right? There's personal patterns that you've got to also account for. That's a big part of being a trader. Bad timing, the entries and exits. Your entry is the key to everything in trading. Bad entry means bad risk, bad everything. If you have a bad entry, the rest of your trade gets all thrown off. Then, of course, the trading psychology influence on trading, right? How you actually feel. These are the things that, we spend so much time on. And then, of course, the poor preparation, the resilience to actually go on and do it. If you can't do the legwork, the homework that it takes to be successful, then you got to turn in your card. See, trading, the fun part is actually the trading day. But the real work happens before the market's ever open, right? You only spend a few seconds hitting those buttons. But you could spend hours getting your mind right, your journaling right, your preparation right to get you the information you need to hit those buttons. And that's where the real success lies. The success lies in the nitty-gritty of actually going through and doing the work. And I think that's going to be really, really important. And what do you do? So how do you avoid being a loser? Right? So we've got our next 60-day boot camp started. Guys, this is a 60-day class. It is the only way I think you can learn how to trade. I'm not saying my 60-day class is the only way, but I'm saying it takes that long. If you think you can go and hop on some guy's DVD, watch for a few hours, you're going to make money, don't work like that. Our class, we have 28 live classes just like this. I'm talking the heat, all right? 28 times of me screaming at the monitor like this. It's a lot of screaming, ain't it? Right? Every class is recorded and archived. You get lifetime access to it. Meaning you can take my live class, my 60-day boot camp, as many times as you want. You can watch the recordings as many times you want. We have everything laid out in a very special way, very simple way on the website where you can go in and watch every single class that we've had. All the recordings, everything is just laid out. Your homework, your quizzes, your links, so on and so forth, flashcards, everything you need. And then you can go all the way back to 2014 and keep watching class if you want. It's pretty cool, right? we do this university style setting. We do a university style setting. All right? Question and answers at every class. Quizzes. Homework. It requires, seriously though, I know we joke around a lot, but it requires a 360-degree loop to really learn something, right? Meaning that there has to be a give and take. You watch material, you come into class, but then you have to give something back, right? And somebody has to respond to you, and then you have to respond back. And that becomes really important, right? You have to go about it that way. Guys, we do trade recaps. So 3 days a week, we do trade recaps, meaning that I go over the trades that I take during the day. So like we bring up my P&L, right? My P&L means my profit and loss for the day. I post it every day in my chat room. So for those of you guys that, I have a chat room where I trade in front of my students all day, in front of you guys. So we talk about it. So I post a P&L at the end of the day about how much money I made or lost. So today was $3,500. Some days I win, some days I lose. All right? But we reverse engineer those bad boys. We reverse engineer every single trade. That becomes huge because what happens in the chat room is that you get watch me trade. Then at the end of the day, I'm recapping everything so that you can figure out what I did right and wrong, right? So that's going to be huge, those market recaps. Then we put our students on trading simulators. Guys, what's a trading simulator? So as you're learning in class, you have 28 live classes, right? So that gets you the book knowledge. So like Keith, somebody like you that's brand new, right? You have the book knowledge. But book knowledge is one thing. Like how do you take it into real world application? So guys, this is really, really huge. So you have your book knowledge, but that's just one knowledge, right? Now, you've got to do this live, like for a living, right? Or for money. So the first step after your book knowledge is to watch me trade. So I'm on screen share every single day, trading, and we're in the chat room, we're chit-chatting. So now you're going to take the book knowledge, and then you're going to marry it with my real-time trading, right? So you can see it in real time. And just know that it's real, right? You can see the patterns and do everything. But from there, you've got to go out and practice it. So we put our students on trading simulators. Then you go out and practice, right? And then you're sharing those trades with the students, right? So like, my students, like I get all their trades, right? So they're sending me their trade. So now, like I'll see like exactly, I see what they're doing during the day. See that? So they're like sending me the trades. So now there's that instant kind of feedback of what's going on. You're sharing the trades, right? You're taking the trades, you're sharing the trades. That's going to be huge. We work on personalized business plans. And then, of course, we have a private student community where you guys can hang out with each other and watch each other trade. I'm trading in there every single day. And guys, you get lifetime access to this stuff. Now, of course, we got a course book and all that fun stuff. I got a course book. It's a 200-page trading Bible. It's like this, just full of my life, of everything I know about trading. And then, of course, you get 3 free months of screen share and chat room and all that fun stuff. Guys, we're giving the early bird special for $2,000 to the first 5 people. If any of you guys just want to have a training consultation about what we do, just type in your phone number or send it to Josh. And what we'll do is give you a call, and we'll get that thing going and really, email Josh, because I realized just now, like, who's gonna fucking type in their phone number into a YouTube channel full of a bunch of degenerate perverts? So Josh, put in your phone number, your email, because I personally would put my phone number in a YouTube channel because half you guys are creepy. No, I'm just kidding, guys. But send Josh your information. Josh, put in your phone number, right, and your email address. Let him send it to you. Good. And guys, this is my cell phone. if you want to chat about trading, seriously, this is the thing. If you want the early bird special, you want to chat about trading, then hit me up. This is my cell number, 517-974-1480. Seriously, text me. Somebody text me, man. This is my cell number. I like to make friends. You guys can hit me up, seriously, anytime you want to chat about stocks. You guys hit me up, all right? Guys, remember this. If you can't get a hold of your mentor on the phone, that's not your mentor. If you bought XYZ's class, you're in XYZ's chat room, and they don't reply back to you, that ain't your mentor, right? If he sends you to a company phone number, that ain't your mentor, right? A mentor is somebody they say, man, boss, I'm in a jam. My trading stinks. My girlfriend is sleeping with my next door neighbor, and he's got a beard and a ponytail. And I'm like, shit, that's a bad deal, right? Let me call you, right? That's where you've got to go with this stuff, guys. You can always get a hold of me on social media. Guys, if you don't mind, if you tweet me or Instagram me and let me know what you thought about the webinar, that'd be huge. And seriously, feel free to hit me up. Send me a text. Let me know, what's going on with you. I think that's going to be really, really helpful. Guys, if you want to talk to, any of our students, anybody that you ever want to talk to, I'll give you names and numbers of any student you want in any town in the United States, and it's going to be huge. Tomorrow's agenda, 9:15 a.m. 9:15 a.m., we're going to go pre-market. We're going to talk about these gappers, right? We're going to go over our watch list. We're going to go over our game plan. That's going to be huge, right? Watch me trade live. I'm going to hit these buttons in front of you guys, and then we'll recap it all at the end of the day. Let's open this thing up to some question marks. And guys, give a holler to Josh or me. If you want to ever chat about trading, that's going to be just huge because, I'll call you. I might even, give you a little FaceTime. Right? Oh, yeah. Oh, yeah. Oh, yeah. Let's open this up to any questions. I know you guys probably been asking questions throughout, but frankly, I haven't been looking at the question box much. So hit me up with whatever you need. If not, I'm going to go out and, get drunk and hang out with some beautiful women, a.k.a. I'm going to FaceTime my mom and, probably watch the reruns of Monday Night Football. But in my mind, I'm going to be doing some cool stuff. Good. All right. Nobody got no questions today, huh? All right. Yeah, Aaron, you can get a TC2000 discount. I think we got some kind of deal for something. Good. All right. Anybody got no questions? Go once. Oh, Eric, how you doing? How do you deal with the spread on some stock? Eric, I statistically, actually, I don't trade stocks with spreads very well, so I tend to stay away from them. If they're illiquid, if they have a spread but they're doing millions of shares in volume, I will try to buy in between the spread. That way I don't get a bad fill, but I will not market order it. Kevin Braywell, what's up, baby? Kevin's asking, are we in a bear market? And frankly, we're not. I don't think so. I mean, we're in a short-term correction, yeah, but bear markets are nasty. But we are in bear market trading. Hey, Northwind, how are you? Do you touch options? Yes. So we have, you'll see Brian Boyd in here typing along. Brian's our options guy, so he'll be doing some guest webinars in the boot camp, and then he's got his own options course that we'll be launching that deals specifically with options, and we're really excited about it too. Hey, Price Juice, how much does the crypto class cost? it might be like $500. Prices, you may not want to trade cryptos right now, though. I mean, they suck to trade. Rowan, how you doing? So, guys, Rowan's asking, like, how patient do you want to be in an ORB setup? Rowan, if it doesn't look like really crisp in a tight range, we don't take it. So the extreme patience, actually. If it's not the cleanest, if it's not the best, then we're just saying no, right? We don't even want to be in it. So, yeah, we got to have a little patience for it. Aaron's asking, about scaling out of stocks. Like, what do you think about, lump sums, scale outs? Yeah, so like typically, yeah, if I had 2,000 shares, I might sell 1,000 and 500. Or if it was really trending, like today, like we took a trade on this TVIX, for example. And I mean, frankly, like it dropped so damn, it racketed so far. So like originally this TVIX, so if can you guys see this chart? So we added this thing like my first ad was as it broke over the 20 EMA here. And then like it pulled back right here to the VWAP. And so I re-hit this thing as it broke out. And like this thing, like it went on a huge run. So like went from 52.80 all the way to like 55. So I'm just scaling out along the way. Like in this particular thing, like, I mean, I sold out like half and then like a fourth, but then I even kept a few. And then like later on, like, I re-hit this thing and like I sold off in 1/3. So like I sold off a third, then I sold off a third. And then I kept 1/3 for Lotto. But like as this thing was going up, I sold off like a half of the 1/3 and then the half of the 1/3 because like it was just going so fast. I mean, it was a $10 rip. Think about this. If you have even if you have a small account and you're ripping 100 shares of this thing goes from 54 to 61. I mean, you can really rip this thing. Hey Keith, how you doing, brother? I got you, Mr. Rowland. Keith, I'll have somebody give you a call. We'll be able to, work something out. I wouldn't worry about that. I'll get you going. Hey, Matt, how you doing? Aaron, what's up? Aaron, I got you, man. What time's girl talk, man? That's nasty. Hey, Joshua, I'll have one of my guys or myself give you a call. Just give me a text, and I'll give you a buzz tomorrow, or have one of my guys give you a call. Where's my? Yeah, you can just text me 517-974-1480. Do you think JC is a trash penny stock? Look, I think JC Penney and Sears, these are just old school companies now. Like, their time has passed. Yeah, I mean, it's going to go to zero. You know how you know that? Most likely because, well, it's been going down it's been going down since 2007, right? Hey Viraj, how you doing? Viraj is saying when a stock has two highs, previous day's highs and pre-market highs, which one do you consider to short? Viraj, I actually don't look at the pre-market data. I mean, like when the market turns on, like I take it off. So I'm not using pre-market data to make my gap decisions. Mostly because I don't wake up early enough to even trade pre-market. So my thinking is, what's the point? Hey, Infinity, how you doing? So good question, guys. Infinity's asking, which stochastics do I use? I use just the full stochastics, and the settings are 533. Good question, by the way. Jane's hubby? You're Jane's friend? Are you from Montreal? Hey, Robert, how you doing? Robert said, what's a minimum trading account balance? It's a loaded question. I think that there's no bad time to start, but I do think you need to kind of have, I would say, at least $2,500 to, like, start. But the more capital you have, the better. Like, I think 2,500 is like your bare minimum. But frankly, like, if you have 5 or 10, the more capital you have, the more room you have for error, for the ups and downs, which I think is really the important part. Hey, Jim. Jim saying, my 9 EMA in the SQ is not the same as yours in the 5-minute chart. Why? You probably have your pre-market data on yours. And, if you have pre-market data, it's, woof, look at this thing. Anybody play this little nugget today? Hey, Dream Team. Yeah, I'll try to make it to the summit. I will. I've always wanted to go to Montreal. Hey, Rowan. How you doing, brother? Good question. Rowan's asking, guys, on ORB setups, do you normally enter right as the level is hit, or do you wait for a retest of the level for confirmation? ORBs are quick. A lot of times they just pop up and fade. So, like, I need to hit them as they're triggered. Good question, by the way. Aaron, can you scale out if you're under the PTT? Aaron, if you have one buy and then, like, say 2 scale outs, it'll just count as one trade. But if you had 2 buys and then 2 scale outs, I think it counts as 2 trades. And you may want to get clarification, but I believe that's the case. Hey, I have another Sarah in Montreal that's one of my students. Man, what's her last name? Montreal. She's pretty cool, too. What was her name? She's a volleyball player. I got to find her name. But she's in Montreal, too. She's really good. And one of my business partners, Jeremy, he's in Montreal, and he's a stud. Good. Anybody else got any questions? Guys, as always, seriously, hit me up if you're, hit me up if you guys are interested in learning. Guys, otherwise, we're going to be trading tomorrow. Get some rest. We got a busy day. I haven't even started looking for stocks for tomorrow, but man, we got a lot of homework. We got money to make, and you guys feel free to text me or email me with any questions you have, all that kind of fun stuff. And man, we're going to have some fun tomorrow. Every single one of you guys better see your asses here tomorrow, 9:15. Let's do what we do, man. I'm excited to kind of tie all this in and kind of show you in real time, like, what I do all day. And frankly, I appreciate you guys, sitting here putting up with me, hearing me talk about myself all the time. No, I'm just kidding. Right, this is my life's passion. So I'm really excited to show you guys what I do. Guys, early bird pricing, you can email me or text me, and I'll make sure you guys get that, right? Or Josh, and we'll make sure to make that thing happen. I love you guys. I appreciate you guys coming in and hanging out a little bit, all right? My friends, as always, going once, going twice. So, adios, muchachos, my friends, my people. It's been real, it's been fun, it's been fast. I got to get out of here and pretend like I got cool stuff to do.